Well, let's start taking a look at the markets on the continent, and we'll start as usual with East Africa in Kenya, looking at the Nairobi Stock Exchange there. My sense is that this exchange has been a bit steadier and less volatile since the election results calmed things down. 0.75 of a percentage point up there to 5027. And then the shilling, we don't often see it actually static, no movement there in the shilling at all. So let's go now to our Kenya market update with Reginald Kadzutu, who is an independent analyst. Reginald, let's start with an overview of the market, and then I want to talk about the banking sector. A lot of activity there, it seems, but no movement in the shilling. And my sense, is it right that things have settled after the elections?
Settled would be a very optimistic way of putting it. More of now a wait to see. Yes, there is a certain calm that has come with now the certainty that we actually do have a president, and he's about to, or he's already started working. So the market is a bit stable, but if you also notice that the market is also, most of the counters are close to their 50-week two highs. So there's also a wait and see from investors. Are these stocks going to break the 52-week highs, or is it going to act as a ceiling and they're going to come back to their close to the 52-week lows? So it's an issue of now timing. What time do we get into the market? So at least the certainty that has come with knowing that we now have a president in office and he has the economic policies that he has laid down that he wants to follow, people can now actually plan properly and strategically align themselves to sectors which they feel will benefit the most from the policies of the incoming or the current president.
Of course, the difficulty is that you might have political uncertainty, which has now largely been removed, replaced by administrative uncertainty, new constitution, devolution of power, different people in charge of budgets, new structures. And I suppose the market is also waiting to see if administratively the country is going to be as efficient as it expects to be.
Yes, that's true. I think from the time the campaigning started, we have always maintained that political risk is not really much more on the violent side, because we're not expecting to see so much violence in this election. The issue was a policy shift, the policies that were going to come into place, because the incumbent, the former president, now NIC Bank, was not running in this election. So definitely we're going to get a new person who definitely were going to come with their own policies. As much as people don't expect a huge policy shift by Kenyatta, but just going from his own manifesto, you'll find it's execution risk that we're looking at now. How are they going to execute it? Are they going to try and rush and do it all in 100 days, or are they going to spread it out over the 5 years, bearing in mind economic principles as they try to implement their manifesto?
I like your term, Reginald, execution risk. We were just talking about Eskom, our big power generator in South Africa, and execution risk there. I mean, you can allocate the money, you can decide what you're going to do. Execution risk does arise. Let's talk about the banking sector in Kenya. KCB, that's Kenya Commercial Bank, planning to open in Ethiopia, Somalia, and the Democratic Republic of Congo. 90% of its earnings at the moment in Kenya. How substantial is this expansion going to be? How important will it be for investors?
For Kenya Commercial Bank, they already have a foothold in most countries in East Africa compared to any other bank in East Africa, or compared even to the local banks in Kenya. For them, is to consolidate the whole region. If you notice, the shift in the East African region is towards either unifying or removing trade barriers, opening up the whole 200 million population market to the whole region, and also to foreign investors. So what basically KCB is trying to do, and most Kenyan banks have been trying to do, is to strategically place yourself around in all these countries so that you can become a seamless banking, you can create a seamless banking environment. So that if someone is in Rwanda, they just know that there is a KCB in Rwanda, and if your headquarters is in Kenya, which most of them are putting the headquarters in Kenya, you want to open an account with a bank which has branches in all these other East African countries. So that's basically what KCB is trying to do, and most Kenyan commercial banks are also trying to do.
Also, they mentioned southern African markets, which would alert some of the big banks in South Africa, wondering, because they've got quite a big presence in southern Africa. So that would be an introduction of competition. And then they say Democratic Republic of Congo remains a key focus. Now, that's been a difficult business, difficult environment to do business in, a rough neighborhood, United Nations, military forces, rebels and so on. They don't seem to be talking about the risks.
I guess the aspect is it has to come to an end at some point in time. The problems in the DRC will have to come to an end. And the idea is if you go in whilst they still have minor problems, they still have a lot of problems, but they are not as compared to the previous years and previous decades of the DRC that we used to know. It's more calmer, a little bit more safer. So if you move in and you show the nationals, if you show the locals in the Congo that you are willing to give them these services in spite of the risks that are there, you tend to get some mileage when things are now calm than people who try to jump in when things are calm. You also get good mileage with the government and with the authorities there, considering that you overlooked the risks that were there and you're willing to provide services to the people of their country. So that is more strategic than really going in for the kill currently.
Okay, so it's kind of putting up strategic credit for when, as you say, things settle down. Now, another bank that's been in the news, NIC Bank, more injection of cash into its Tanzanian subsidiary.
Yes, again, trying to consolidate their position there. The bank is trying to raise money to expand in Tanzania, and it's not listed, so it's open to the shareholders of the local subsidiary, and they're just trying to make sure that they protect their shareholding by putting in more money. The amount of money they're putting vis-a-vis the current profit they've gotten so far, I think close to 108, 109 million, has come from the Tanzanian market. You can see they're also looking into the future. How successful it will be, I'm not really sure. But I guess at that point, I think what most Kenyan banks actually need to start doing also, as much as they're expanding, is also diversify from their core banking business. They need to go into bank assurance, they need to go into investment management, they need to go into deal making, and they just need to broaden so that even as they go out to these other markets, they're not just offering a normal banking operations that are offered by any other bank. They're bringing in extra value-add services that will help the countries they're entering into.